Hey everyone, to stick with Us versus Herd. If it's your first time here, love the content, hit subscribe. If you want to get notifications for when we post videos, tap the bell. And if you want to subscribe to our options trading live channel, we go live Monday through Friday, 30 minutes before market open. Link is below in the description. And if you want to join the UVH fam, the link is below to our Discord and our options trading group on Facebook. If you made money today, comment below, got paid. If you lost money, comment below, learned a lesson, and do me a favor, hit the like button for the YouTube algo. Really appreciate it. Right now, the market is still open. We're closing up. I was pretty much done with all my trades earlier this morning. Left a lot of money on the table. I'm up about $450 in realized profits today, which we left a lot of money on the table. But before we get into the trades, I just kind of want to touch base on where I think that the market is going right now. We had a huge recovery. Today the market was down due to U.S.-China trade tensions and that whole thing, but the market recovered, it rebounded. It looked like, if you're looking at SPY, it pushed up from 281 to 285, came back down to 282. So we're, trading in a nice little range here. Good for both bulls and bears in terms of day trading. This is what we look for when we want to day trade. We want intraday price movement, price action. And that's what we're getting. For a while, it was just like we were just flat. We would only gap up, gap down, and then the market would just lay flat. And we were like, you can't do anything with that except for swing trade, right? So, we have been making money on the swing trades, but it is nice to have a little bit of intraday price action. You can scalp a little bit, have a little bit of fun, and that's what we're looking for. Right now on SPY, we're still range bound. We're coming up on the 10-day moving average right now. Looks like it wants to push up, but looks like we want to push back up between 290 to 295 area. We're pretty much stuck between 280 and 295. We're just pinging back and forth, which is fine, which makes the market predictable, which is what we want as option traders. We want to know where the market is going to go, and if there is actual resistance up here as it comes up on here, we can say, hey, we're going to scale back our risk. We can tread lightly. If you want to load up on the calls, you can too for that final buster. It might not. Who knows? But that is what we're looking at for right now on SPY. Now I closed out a couple trades. The most profitable trades today I did. We'll get to Apple in a second. So DOCUSign today I closed out. I had the 120 calls, and I kind of wish that I kept them, but I also don't, because they're expiring for next week. And what I've been trying to do as the market is slower, I'm trying to push my expirations out. So I was in for next week, for next Friday expiration. I didn't really have anything that was active. Some of these are inactive trades. I didn't really have anything expiring this week that I really cared about. So the 120 calls on DocuSign, let's pull this up here. So I bought them for $5, sold them for $5.80 this morning. Those DocuSign, the 120 calls for next week, are now going for $7.90, $7.50, probably $7.50. So I left basically $400 on the table here. So this could have been a $600 trade. I did close out for a $160 gain. I've been taking my profits around 20 to 30% because the market being so unpredictable. I don't know where it's going, but DocuSign is a really hot stock right now. It's a little bit dangerous because the volume isn't really up there, but it's gone from 115 to up to 126. And so then I entered after I got out of that. So I am capturing something on that. I did buy a debit spread for 2 weeks out. We do have earnings coming up on DocuSign on June 4th after the bell. So I got into May 29th. I have a debit spread on there right now, which I'm probably gonna have to close soon, probably Monday, because there's only so much juice you can get out of this. I was thinking maybe it could hit, DocuSign could maybe hit like a 128, 129 area. So right now I'm long 2 of the 123 calls, and I'm short 2 of the 130 calls. So I got into a little less risky position on DocuSign, but DocuSign has been a money maker. It's been killing it. But yeah, we made $160 on a realized profit. I'm up a little bit. I'm up 20% on the current position now. But that would have been instead of 160, it would have been a $600 trade in profit, $600 profit. But I can't complain about 160. Same with Home Depot. kind of kicking myself on this, but I wanted to get myself more time. I didn't know at market open due to the news. I mean, Home Depot is not really impacted by the trade war news, so I wasn't really sure what was going to happen. But Home Depot, let me pull up the chart real quick before we get into the actual trade. Home Depot I put on yesterday. I put on a debit spread. This is a pre-earnings run-up. I did put it on for next week, so I didn't really want to hold a lot over the weekend with the China trade war news, even though Home Depot is not really that impacted. I just didn't really want the stress. But Home Depot has been doing nothing but ripping today. It opened at 232, it ripped up to 238, and now it hit 243. This trade was insane. So I actually bought yesterday the 232. I should have pushed it out. I don't know what I was thinking. I should have pushed it out so that way I wouldn't be inclined to sell. The only reason why I wanted to sell it is because I didn't want to be in next week expiration. When I entered the trade, I should have pushed it out. It happens. Here we are. And that's the main driver that made me sell, not because of the profit percentage, but because I wanted to get out today out of next week expiration. So I was trying to roll some trades out. I should have probably got out and re-entered, but it is what it is. And in retrospect, it's always like that. You're like, hey, I should have done this, I should have done that. Hey, you did the best you could with the information that you had. You make mistakes, but we still came out green. It's not like I sold it for a loss. So I was in the 232.50 call. I bought it and I sold the 250 call. So it was a debit spread. So if we look at HD here, so I've been making money the last couple of days on HD. So I bought it for $535, sold it for $680. I mean, that was good. Unfortunately, I only bought one contract. Unlike DocuSign, I went in double, made some good money. So I went in double on DocuSign. But Home Depot, I only won in one contract, and we made good money. But now, if we look at this trade for next week expiration, I was long the 232. Yeah, the 232.50 and short the 250. I mean, I sold it for $680. It's currently going for $9. So we left another couple $100 on there. So we're leaving money on the table all day today. But the good news is we did lock in $450 worth of profits. I mean, it's a good day. It's a good day. I'm glad the market was moving. We captured a good percentage of the move, and the market was pretty unpredictable due to the trade war news this morning. So, what can I say? I'm definitely not complaining, but it kind of goes to show you that, you want to stay disciplined. In the times that it's protected me, there's going to be times like today where you're like, hey, if I just let it run a little bit longer, it would have been okay. But then there's going to be times that this discipline is going to save you. You're like, man, why didn't I take my profits earlier? Why didn't I do this earlier? And now you're kicking yourself. So now, mentally, I'm disciplined just to take profits when I hit certain targets instead of letting it run. And if you want re-enter, like DocuSign, I think I played right. I took my profits and then I re-entered. Home Depot probably should have done the same, but it has earnings. It has earnings next week, and I really didn't want to get involved with that. And it's a retail shop, and I don't, who knows? I want to maybe put in a new trade next week for earnings on there, but I'm not. I just wasn't sure what I wanted to do with Home Depot. Is why we did what we did. Now, DKNG, another one. I'm actually really surprised it came out with a profit for this. Now, DKNG, I had a bad entry, and let me pull up DKNG. I was selling a put credit spread. I got $3 in credit, and I bought it back for $247, so I made $53 in profit. And what this trade looked at, and it actually came up, even more now. So I was selling the 30 strike, and I bought the 25 strike for today's expiration. So it's really, really risky. So it's now worth $1. We could have locked in a couple extra $100. I bought it back for $247. So we would have made another $150. So I left another $150 on the table, going into market close right now. And essentially when you're messing with same day expiration, you don't want to be holding. You could be assigned. Not that I would be upset that I would be assigned some stock on DKNG. I wouldn't be that upset, but it's sometimes you just don't want to mess with the hassle of that whole thing. And then at the same time, DKNG, they didn't have the report. They actually opened up lower, and they skyrocketed. I sold it off at 9 a.m. So I sold it on the top of this because I'm like, man, it's getting weak up here. I'm going to exit because there's no way this is going to get above 30. And here we are, push 29.40. You know, I thought maybe it was going to skyrocket and come back down to like 26, maybe 25, go a little red on the day, but this skyrocketed and it's been maintaining. So I'm going to be looking for another position on DKNG. And this is the second position. I mean, I made some money on this. The other position I did make a couple days ago, DKNG, I was holding, and I was actually looking at this position, and I held it. I bought it on April 24th. I bought a strangle on it for June expiration. Had a lot of time. I bought the 1750 put, and I bought the 30 call. I sold it before earnings for 443, and I was just checking it out because my idea was, hey, I'm going to take this off while IV is inflated. Even though DraftKings DKNG went towards where I wanted to go. I wanted it to go towards 30. But looking at that position now, I made the right choice because, let me just clear this. Going into here, I was long the 30 call and I was short the 1750. Now it's only worth 345. So even though it went closer to my 30 call right here, the premium crush got it, and now it's only worth 345. So a couple days ago, I sold this on May 13th, 2 days ago. I sold this for 443. DKNG was lower. It was like 26.50, I think, somewhere around there. And now that trade is only worth 340. So that's why it's important to understand options pricing, implied volatility, delta, theta, vega, that whole thing. You got to really understand it, because if I would have held, I would have been down $100 on that position from where I made it. I mean, I bought it for 315, so I would be up money. But instead of making the whatever I made 40% or so, I would only be up like $30 right now. So that is one good example for understanding options pricing. So I just wanted I know it's not a trade I did today, but I just wanted to make a point on that. Also, I did scalp Apple a little bit here today, made $92 in profit on Apple. And we'll pull this up. So Apple kind of hit this pretty good. I bought it for $6.94. I bought two of these. I bought the 302.50 strike for next week, sold it for $7.40 within 20 minutes. I bought it at 11:04 a.m., sold it at 11:24 a.m., and really just nailed that on Apple. You know, I noticed that Apple was consolidating in here, and I was aligning it with the futures chart here. Futures were bottoming out here. This wasn't really bottoming out, but was just really relatively flat. So at 11:04, when it skyrocketed, I probably should have entered in here, but I just wasn't sure. Maybe it's gonna, maybe coast back down to 302 area. But then when it started to make its move, when it broke the high here at 303.60, I added in and I pushed up to 11:24. And yes, I didn't capture the full move here, but it was just a quick day trade, just a scalp, and it's obviously higher now. I mean, those calls probably for next week, let's see, 302.50s for next week. The 302.50s are now worth $820. I sold them for $740, so I left another couple $100 on the table there as well. So, overall it was a good day. I took profits early just because I was uncertain what was going to happen. I didn't really want to hold that much over the weekend due to potential trade news, and I definitely don't want to be long Apple over the weekend. If I'm going to be long any stock, I would rather be long DocuSign or Zoom or something like that, DraftKings, and not Apple, because it's highly impacted by the trade news with US-China trade news. So that being said, if you watch this video to the end, comment watch to the end, hit the like button. As always, stay safe, stay green. It's us versus herd.